Hello everyone, welcome back to my channel. And before I continue, I want to take one moment to thank all my subscribers and all my viewers. Thank you for your support. We have now 600 subscribers. I am very grateful and I want to thank you guys all. And I hope we will keep doing the good job that we have been doing already. So let's continue and go ahead in this presentation. In this presentation, I want to talk about how to manage your investment portfolio. When you start investing, when you start building your own investment portfolio, there are two main things that you will have to do, and it is a diversification and allocation. You have to diversify your investment, and at the same time you have to allocate fund properly. So in this presentation I will talk mostly about those two things, and you have to bear in mind that some people have to hire mutual fund and stuff like that to get the investment uh, um, be properly allocated or diversified. But today I'm going to teach you how to do it on your own. You do not need anyone to diversify or to allocate your portfolio for you. Today I will teach you how to do it. Let's get into it quickly. So, what is a diversification? First of all, diversification is the fact that you split your stock investment in different sectors. So you do not want to put all your eggs in one basket. That's the main reason why you want to diversify. This will lower your risk in case one sector is hit. And you have to bear in mind that we have many sectors. Here are some of the sectors that we have. We have the technology sector, utility sector, conglomerate, consumer good, healthcare, industrial good, financial, and so on. We have a lot of them. Now, the main thing is we have many sectors. You need to have an exposure to three sectors at least in order to diversify your investment. As I said already, you do not want to put all your eggs in one basket. We have the technology. You can put some of your money in the technology stocks. You can put some in the utility. I will show you a graph right now and you will see how you can diversify your investment. So we have consumer good, we have healthcare. You can split your money in those sectors. You just don't want to put all your money in one sector. If that sector has a problem, your money will have a problem because you are investing for the long run. You want to diversify. So let me show you the graph right now. Here is a graph of a portfolio that has been diversified. Okay, so in this portfolio we have 30% of technology sector, we have 30% of consumer good sector, and we have 30% of financial sector, and we have 1% cash available. This is a typical um, graph that I've made to show you how you can diversify your portfolio. Some people they can split this in four. I did it 30%. You can do it 20%. It's up to you. You can do it at 25%. Now, this means that when I take the technology sector, I can have a lot of stocks in there, at least three stocks. I can buy three stocks from the technology sector. And if I take the consumer goods sector, I can buy three or four stocks from that sector as well. If I take financial, I can do the same. The reason why I always say that you guys need at least 10% cash in your portfolio, it is that you might have some opportunity in the market. You are already in a position that with a stock, and that stock is dropping, but you are investing in the stock for long term. You can take some of the 10% and buy more share of the stock that is dropping. So those 10%, most of the time, they come from your dividend. Okay, the dividend payment that you are receiving, you might keep some just for 10%, and you might reinvest the rest of your dividend. So let's go to the next slide. The next slide, we want to talk about allocation, portfolio allocation. So what is an allocation? First of all, is the fact that you choose to put your money into different stocks. You're not just going to buy one stock. As we said at the beginning, allocation and that diversification, there are two things that work together, and they do allow you to manage your portfolio. There are two things combined in one, but they are very important. So this allow you to balance your investments, because you're not going to put all your money in one stock. You're going to balance it. You're going to put some in different stocks. So again, you do not want to put all your eggs in one basket. The next slide, this is a graph of a portfolio of allocation, like allocation of a portfolio. Okay, I'm sorry for the term. Now, when I take this portfolio, I still have 1% cash available, but in this portfolio I have 15% Apple stock in my portfolio. I have 15% AT&T, and I wanna say this quickly, this short disclaimer. Any ticker, any stock that I'm showing right here is not a recommendation, it's just for education purpose only. I'm not telling you to go and buy any of those stocks. Anytime you want to buy a stock, do your own due diligence and search the stock, do your own due diligence before you buy it. Okay, so now I have 15% in Apple stock, I have 15% in AT&T. Those two stocks, they are already technology stock, so they are making up my 30% that I have talked about in the diversification. When I take Bank of America stock and I take Citigroup stocks, those two, they are making up my 30% of the financial that I have talked about in the diversification. So you see, Bank of America, I have 15% in the stock, and in the Citigroup, I have 15%. Now, the price might be different. It doesn't matter. But at the end of the day, you want to make sure you have 15% of Citigroup or 15% of Bank of America in your portfolio. Your portfolio might be 1 million, it might be 1K, it might be 2K. That it doesn't matter. You still have to diversify. Okay? No, I have 15% of BJ stock and I have 50% of PepsiCo stock. So these are it is the way that you can diversify your portfolio. And when we talk about diversification and allocation, as I said already, there are two things that manage your portfolio. So you have to combine them at the same time. When you are choosing your stocks, you are looking at the same time at the sector. Once you reach okay, the target for each sector, you stop and you choose another sector. That's how you do it. So it is very, very important when you want to build your own investment portfolio. Those things that I just say right now, they look simple, but if you can follow it, you can build a proper portfolio for your investment. Thank you for watching and have a beautiful day. Bye bye.